After a strong reporting season, it looks like the Australian market wants to make a fresh all-time high. But at the moment, we're waiting for permission from the US. So hi there everyone, welcome to the Traders Circle Weekly Market Update. It is Tuesday the 24th of February 2026, and before I start, you do need to be aware that whatever I say is general advice only. So it's been a pretty wild few days from the US. On Friday night, the first news, and perhaps the most important news, at least from a more longer term perspective, was some terrible economic data. Terrible economic data, and I'll repeat that the third time, terrible economic data. The market's completely forgotten about it because what happened after obviously made all the headlines, but they saw much worse than expected GDP growth, and they saw higher inflation. Obviously, the higher inflation is bad because it points towards rate rises. The lower GDP growth is bad because it points to a weakening economy, but you can't really support the weakening economy with lower rates if inflation is rising. So yeah, really bad mix of data on Friday, but immediately the market forgot about that data because the Supreme Court ruled that Trump's tariffs were illegal, and as a result, they would have to be repealed. And so the market forgot about the bad data, and it went on a run. It jumped higher on Friday despite the negative economic circumstances. So the US market was up on Friday, and then after US markets closed and over the weekend, Trump basically had a tantrum, and he said, I'm going to tariff everyone 10% anyway through another mechanism. And then he came back a day later and said, actually, I'm going to tariff everyone 15%. You can't tell me what to do. And so, US markets fell overnight. They were down quite strongly on Monday due to Trump's weekend tantrum. A pretty wild few days in the US. Our market fell yesterday as well. We weren't really sure what they were going to do overnight in the US. We sort of stabilized a bit today, but still a bit of uncertainty there, just trying to digest all this sort of crazy US news, crazy US movements, the instability of their president and their weakening economic situation. Contrast that to the Australian position, and we've actually had a really good earnings season, at least from the most important companies, the biggest companies. We saw CBA, our biggest listed company and our biggest bank, head of our biggest sector. They reported better than expected results. They were up very strongly on the day. We saw BHP, our second biggest company, the head of our second biggest sector, report better than expected results, and they were up quite strongly on the day. We've seen a lot of other big companies report better than expected results as well. Telstra as an example. Woodside was up after their report today. There's been quite a few good reports. There have been some bad reports as well. CSL is a standout, as was AMP's report. But overall, it seems like a fairly good reporting season, a better than expected reporting season, and it's being very well received by the market. Given that's the case, and given that our market has been near all-time highs, it does seem like we want to push into a fresh all-time high. We want to break above 9100 on the XJO. I think if it weren't for a bit of uncertainty in the US, we probably would have seen that already. So at the moment, our market's trying to push higher. Definitely, we've got a bit of bullish momentum, but at the same time, a bit of uncertainty overseas is just holding us back a little bit. The thing is that I think our market will fall quicker, it'll sell down quicker if we do first see that break higher. If we don't see that break higher beforehand, we're going to continue to grind sideways to higher. Once we do break higher, that's where we will start to see the profit taking, in my opinion. The one sort of local negative item, though, is the interest rate situation. So we've already seen a rate rise this year, and the market's now starting to look at the potential for more rate rises. We will get a bit of an update on this tomorrow when we see Australian quarterly inflation data. If that comes in stronger than expected, we're probably going to see another RBA rate rise, most likely in April, and yeah, that will be bad for the market. So that's the one sort of local negative thing for the market, is the potential for more rate rises. That inflation data, 11:30 a.m. Australian Eastern Daylight Savings Time. If it's much stronger than expected, even a little bit stronger than expected, that could be a trigger for some profit taking for our market. If it's in line with expectations, if it's lower than expected, that'll be sort of sideways to bullish in its perspective. Finally, I wanted to talk about what AI is doing to the investment markets. we're seeing a sort of multi-pronged effect, but perhaps most importantly for the Australian market is we're seeing a big sell down in stocks that could be disrupted by AI, particularly software stocks. I'm talking Aristocrat Leisure that makes digital games. I'm talking Xero, which produces accounting software. WiseTech, which produces logistics software. These sort of companies that have up until now been able to charge an exorbitant amount of money for, software that is facing few competitors, they now face the potential of their customers going into, an AI platform, typing out what they need, and the AI producing, essentially free competing software. This is a real threat to these businesses. Now, you could argue that they've been oversold in the short term, and that could be the case. Most likely their business models will hold up for a little while. But there is a real chance that, this is an existential threat to those businesses. So it is very hard to, calculate or price up, just how much they should fall to, just how much they should come off. A lot of these companies have fallen a very large amount already. I'm talking 50, 60, 70% in some cases. However, they're still extremely expensive in the large part. A lot of them are still trading at, 40, 50 times current earnings. And if AI is going to basically give them an existential threat in a few years, that's still a very, very, very expensive share price. So perhaps the most important AI interaction with our market is a bit of a sell down in some of these software stocks. I would also say that it's created a bit of uncertainty around a lot of parts of the market, except for a handful. And some of the sectors that perhaps aren't as uncertain are things like the material space, the mineral space. AI isn't going to code a mine out there. They basically are restricted to the digital world. If anything, their software may help mine owners. So we're seeing the material stocks outperform at the current time. At the same time, all this AI infrastructure build out might use additional materials and push the price up for materials as well. So a bit of AI disruption for the market. Wouldn't say that it's over necessarily. And we will also get a bit of an update on the AI space with the NVIDIA report, which is going to come out Wednesday night Australian time, technically Thursday morning. It will come out after US markets close for their Wednesday session. So that NVIDIA report, it's going to inform people about, AI spending at present, whether that's accelerating, whether that's coming back down, and it's the most valuable company on earth. So its move after that report will also move markets. Let's have a quick look at the charts for this week, guys. This is the US market, the S&P 500, and we can really see that they're starting to form a bit of a sideways range. They've got support at 6,800, resistance at 7,000, and it has looked like, at least quite a few times, that they would bounce from 6,800 and head back to 7,000, the all-time high. We saw the move on Friday after the Supreme Court repealed those Trump tariffs. That was a bullish candlestick. That was indicating a move towards 7,000. But with Trump's tantrums over the weekend, he threw a bit of a hissy fit, not a great look. Their market pulled right back in on their Monday session. So overall, still stuck in that sideways range, and we have to assume they're going to continue to move sideways until we see either a break of that 7,000 level to the upside, or a break to the downside below 6,800. So sideways for the US market until we see a breakout. Looking at the Australian market now, we've got the chart of the Australian market here, and we can see that we've been testing our all-time high, roughly 9,100 index points. We've tested a few times recently, but we have not been able to break through. We've got a longer-term uptrend. We did have a shorter-term uptrend line, although that's now broken. And so, really we're sort of bouncing our head against the ceiling. We're bouncing our head against the resistance at 9,100. Given that's the case, we do tend to see a bit of a breakout eventually, and usually it's after that breakout is when we see the pullback. If we don't break out, if we keep bouncing our head against it, often we don't end up seeing that strong pullback. Usually our market needs the break higher before we do see that profit taking. But it's not a guarantee. So for our own market, we are also watching a couple of key levels. Like I said, to the upside, we've got the all-time high resistance at 9,100. If that breaks, we will very quickly come up and set a new high, probably in the next day or even the same day that we break higher. After we set that new high, that's where we expect the pullback. If we don't break through 9,100 though, we'd have to see a break below 89.80 here for more selling to look likely. And if we do break below 89.80, I would then expect to move towards the uptrend line, which you can see on the chart here. So similar to the US market, perhaps in a little bit of a holding pattern, a little bit of a holding position. I think our market does want to break higher. We're just waiting for permission from the US. And once we do break higher, that's where I think we'll see the profit taking in the pullback. So we'll wrap it up there for this week, guys. Hopefully you enjoyed. If you did, click like, click subscribe, and we'll see you guys next time.